All right. So I'm actually gonna start off right now since it's already 10 o'clock and it's pretty late in the night. But welcome to all of you guys. This is a weekly thing. Me and my buddy JP here will be trying to host like every week. It's completely free. It's definitely worth people being educated about what's going on in the markets and not just blindly, taking trades, right? So that's the whole reason JP here and I both have this weekly thing going on. But usually we try to host these on Saturday. We call it Saturday Tickers. Unfortunately, tomorrow I'm taking a flight in the AM and I'm going to be completely busy this weekend. So we decided we're just going to have it Friday, today itself. So that's what we're going to do. But, before I get started, just want to let you know this session is recorded and will be posted on YouTube probably tomorrow. Just for anyone who wants to review what we went over today. As you saw in the announcements, you can feel free to post questions or tickers in the Ask Bishop channel. We'll review as many as we can. Just to give an introduction for those who don't know who I am and who JP is. My name is Market Bishop. My personal first name is Kevin. I'm an Indian guy who sounds white. I'm 23. I've been trading for 11 years. My main strategies are just price action and volume. I primarily do options. I do futures as well, but my baby is options. So I always, go back to that more than anything. I love doing swing trading. I do day trading as well. My average win rate has always been above 90% for not even six, probably like 8 years consecutively. I believe you can find a lot of value in just understanding price and how the market works as a whole. So JP and I's goal is to bring you the understanding of how the market works and so on. Enough about me. I'm going to briefly introduce JP here. JP here is my business buddy. We've known each other for a few years. What I lacked when I first met him, which is crazy, because when I first met him, I told him I don't even pay attention to any economic news or data or any fundamental analysis, and he found that crazy because I might be great and amazing at technical analysis, but JP is amazing at the fundamental analysis. So reason he's on here today and he's going to be on here for the other talks is because this guy knows a lot of stuff about market, how the market works, money rotation, fundamental analysis. So it's a really great perspective to have. It's really great to have two different perspectives, right? You have the technical analysis from Kevin and you have the fundamental analysis from JP here. So today and for all the other weeks, we're going to take turns streaming, talking about whatever we need to talk about. And so basically what we're going to be reviewing today, as I said, is tickers and what's happening next week, what happened this week, and answering a few questions. So to start off, we pretty much know that next week is going to be pretty big with a few big stocks having earnings. As you can see here, I have the simple picture that you guys probably seen all the time about the earnings calendar for next week, starting October 28th. Some big names you could already pick up, just by looking at this very quickly is Ford, AMD, SoFi, McDonald's, Visa, Etsy, Roku, Intel, Apple, Amazon, what else? ExxonMobil, Wayfair. So we have a pretty huge, and Starbucks as well. We have a pretty huge week coming up. That's why, as you guys have seen, I actually scaled down on my swing trades just because I don't want to swing very high IV contracts heading over the weekend. We also do have what's it called? We do have a few economic events. We have ADP, nothing on Monday, but we do have consumer confidence on Tuesday. Job openings on Tuesday as well. Then we have ADP employment, GDP on Wednesday. Thursday we have personal income, personal spending, PCE index, as you can see here, initial jobless claims. So Thursday is going to be very heavy packed in data. I think Thursday is also very important for earnings as well. So I probably might steer clear of trading on Thursday because we might have a lot of chop that day. Friday we have U.S. employment rate, U.S. unemployment rate, hourly wages, so on and so forth. So to get started, I'm gonna hand it off to JP, and he's gonna briefly talk about what happened, the important things that happened this week, and important stuff to look at. So I'm gonna end my stream here. JP, you can feel free to start yours.
1 second.
And feel
I
free
am going.
call JP Mr. Dinosaur since he's the old one of the group. Yeah, go
I'm
ahead.
not old. I'm incredibly handsome.
Yeah. Okay.
First and foremost, I want to go ahead and say that thank you everyone for coming in so late. It's always great to see people that want to learn how to trade or want to learn about trading or what's been happening, world events, etc., etc., etc. As you guys all know, the guys that have been here before, you guys know my story. The new people, I started trading when I was 21. I'm now 41. Primarily, I was an equity trader. Focused a lot on diversification. I primarily trade cybersecurity stocks and military stocks, defense stocks, Raytheon, Lockheed Martin, Palo Alto. I'm also a big oil trader, USO, Exxon, Chevron, TPL, Oxy. I like to focus on the things that I know. I don't venture into areas of the market that I don't understand. I rather be the smartest guy in the room on one subject than be the jack of all trades and owner of none. I always have this chart open, which is the S&P tactical watches that I created, where we watch the DXY, the VIX, obviously the ES for futures, PX index itself, and all the spiders. If anyone ever needs this S&P tactical watches, I'm happy to share it with you. These are all the spiders that are currently traded. And what I like to do is I like to see a balance of where the market is moving. Obviously, the more spiders that are red, the more likely that you are going to have a red day on the S&P. Take into consideration that the XLK is the technology fund for the spiders, and it's more heavily weighted than a lot of the stuff here. Like for example, the XBI, which is the biotech, it doesn't have as much weight on the S&P as the XLK would. But more so, I want to talk about something very important that happened today, and it was my favorite economic indicator of all is University of Michigan Consumer Sentiment Report. If you guys that were here last time, I'm going to go ahead and open up Gmail. Not Gmail, I'm so sorry. Open up Financial Juice. And you guys know that Financial Juice is a website that gives us all the information that we need about all upcoming events and the relevant numbers. Unfortunately, it doesn't give me the previous information, but basically what ended up happening was University of Michigan sentiment came in better than expected by a lot. And this was a trade that we were talking, Kevin and I, that we wanted to watch very carefully before we decided to take any directional trade. Essentially, what ended up happening today on the S&P, when the market opened, we pushed up, and we went right into an area that we had already drawn out even before we had this PDH, which is previous day high. And the market just pushed up right into the data, and the data came out positive, and everyone that doesn't understand the data would think that good economic data means that the market's going to push up. However, what essentially happened was the market realized that by having better than expected consumer sentiment, this basically is going to indicate that there's a low probability, a much slower probability that the Fed is going to cut at the velocity that everybody was thinking. Meaning that the whole concept of cutting rates fast is gone. If you go to the dot plots, which you can see, the dot plots is actually the Fed's watch tool for Fed rates. You can see that the percentage of how many rate cuts we're going to have this year have gone down. Essentially, what's happening is that good economic data has now turned negative for the markets, meaning that rates are not going to come down as fast as we want. And this is not good. This is not good for the S&P. So essentially what ended up happening was we came back up and then we just gave it all back because the market realized that they had been following this bull trend, thinking that regardless of whatever data came out, markets were going to push up, going to push up, and going to push up. I always say the following: the market is always set up in a way so that when data comes out, it's going to react violently. There is no coincidence that the consumer report came in better than expected. There is no coincidence that the market pulled back this much. And there isn't a coincidence that it's pulled back to a level on a daily, which is right around here on the S&P at 5,800, right? Even though we closed at 58,808, we're still in the 5,800 mark prior to going into big earnings. So the market is going to pick a directional movement next week. It's either going to break below 5,800 and start targeting lower areas, possibly the 20-day simple moving average, which is right over here, this dotted plot. You guys know that I use EMAs and SMAs on the daily. So if the market breaks down, it'll probably target right down here to that 57.90, and then we can start looking at these fib levels and seeing how far the extension can go, with 57.62 being the overall target. Prior to getting into this trade, I was talking to Kevin, and we were looking at bond yields. And I was telling Kevin right around here, at around 8:30, at around 8:30 into 9 o'clock, I said something is happening because the 2-year bond yield is getting bought up. And lo and behold, I always say the bond traders know what the data is going to be before it comes out. And if you guys know anything about bonds, bonds are inversely correlated to yield. When yields go down, that means that bonds are getting more expensive, and when yields go up, it means that bonds are getting cheaper. So whatever happened here, the bond traders knew that the data was going to come in good, and they were buying the yield as fast as they could. Essentially, there was a pop again in yields, but somewhere between here and here and here, there was a lot of money made by the bond traders, right? So when we saw this, the 2-year pushing down, we had a feeling the data was going to be bullish and that the markets were going to push down, and we talked about it, and essentially that's what happened. Funny enough, as we were watching this trade collapse, we were keeping a really close eye on the XLE. And we saw that the XLE was kind of holding in a range, and then it broke down. And right towards the end of the day at 2 o'clock, we saw this giant spike. None of us knew what this was. We just thought that it was money circling back into the oil trade because it was too cheap. And lo and behold, if any of you have been watching the news, in the last 2 hours, Israel has retaliated against Iran. So I always say that big money, smart money, knows what's happening. So somebody knew something was happening here, and they piled it into oil. If we go into my master list and we turn on extended trading hours, we can see that the XLE exploded right in the after hours because of the attack. And if we go and look at USO, which was a trade that we were discussing earlier today, and forgive me because I have just too many things here spread out, so let me just scroll down to where I see oil or energy. We can see that USO was getting bought up all day today, and then this pop happened, right? So it's kind of funny to sit here and talk about how big money knows what's going to happen, and you don't want to wear your tinfoil hat. But I don't think that the market is. I don't believe in coincidences. I think that everything happens for a reason. And when you see this happen, smart money knows that something is coming, and boom. So we could probably expect oil to pop. If I had to guess, it's probably going to reclaim that 76.14 and push for that $80 a barrel mark. At that point, then we got to decide what's going to happen. The point of me explaining all of this is because I'm trying to explain to everyone so that they understand how everything is directly correlated, and how having a perspective of what the market is doing on all sides gives you an opportunity to catch trades. Before I hand this off back to Kevin, I want to point something out. When it comes to the S&P, yes, it looks like I have a lot of levels. A lot of people like to ask me why that you monitor the S&P over any other index. I like monitoring the S&P over any other index because I get a true gauge of the market sentiment. The Nasdaq, in my opinion, not only is it a heavily weighted tech obviously it's a tech index. it's controlled by just a couple of phenomenal companies, the Max 7, right? Um, as opposed to the S&P, even though the Max 7 are heavily weighted into it, there's more of a better feeling of the ebbs and flows of the market, and having the S&P tactical watch list that I have open and being able to see all the spiders allows me to see where the money rotation is. And if you were here on our last call when we talked about money rotation, we talked about this website called FinViz. And FinViz is phenomenal because it gives you an opportunity to have a visual representation of what exactly is happening in the market. So, for example, here are the groups, and we can see what the performance of each group was this month, this week, and today. And here's a perfect example of how you can see how money is rotating out of one sector into the other, and so forth. This is a great website that if you guys don't have, please feel free to message Kevin or I. We can send to you, or Kevin can put it in the main chat or in the Ask Bishop channel so you guys can use it. We had talked about how this works previously. All you got to do is go to finviz.com, click on groups, and let's say that you want to see what's inside of the communication services sector. You click on the actual sector, and it shows you all the list of all the stocks that are in there. I have no idea what this commercial is. And you can actually break it down by the average volume, et cetera, et cetera. Great website to have resources so that you can understand where money's rotating and what stocks you could possibly look for trade opportunities. So keep this website in mind. I want to end it with this before we move on to tickers, because this is a trade that both Kevin and I are in. Kevin and I, towards the end of the day, Kevin and I, towards the end of the day, we looked at an opportunity to go short on Zoom off this daily setup. As you can see, we're right now going to be in the green going into Friday, assuming that Zoom continues its downtrend. One of the things that Kevin and I like to do is we always like to sit at the end of the day, towards the end, and look for these type of opportunities for breakdowns. Where can Zoom go? We don't know, but we're actually taking an educated guess that it could probably come back down to this $70 price range right around here. But these are the kind of trades that we look for in our swings, and keep those in mind. Whenever you see something like this setting up, these are great opportunities to take trades. I do want to point something out. We had discussed previously about MSOS, which is the Advisors Trust. The Advisors. The Advisor Shares Pure U.S. Cannabis ETF. We actually took this trade last week, actually about 10 days ago, and we took this breakout and we took it all the way up to here. The reason that we had taken this trade was because, as you guys may or may not know, Amendment 3 in Florida is up for vote, which will legalize cannabis in Florida, which is going to create a huge influx of revenue towards all of the major cannabis companies like Trulieve, Curaleaf, et cetera, et cetera. Rather than trading the individual company, we decided to trade the ETF. We took the January 19, if I'm not mistaken, if it was January 19, I forget what day it was, calls.
Yeah, it was.
Yeah, the January 19 $10 strike calls. And in a matter of 3 days, we had a full breakout, and those calls, those swings for January, are now up 56%. This is a perfect opportunity. This is a perfect example of why Kevin and I like to take swing trades and look for these type of opportunities, because guess what? You can be in a trade that's 3 months out and make 50% without even breaking a sweat. And now here's the great part about it. You can sit in this trade, take some profit, and leave some runners to break even or just a little bit of below break even, but you can let it keep working. So these are reasons why we prefer to swing trade as opposed to day trade. Before I hand it off to Kevin, I just wanted to point one last thing out. We are going into a heavy week of data and a heavy week of major companies reporting earnings. So every single setup that you see can be automatically disrespected. Take into consideration that the most important piece of data that we are going to get is unemployment on Friday. So be cautious of what you're swinging this week, because it is going to be a bit of a wild ride. So if you are in a trade and you are in a weekly and you do see some decent profit, take some off the table. Don't leave it all there, hoping that it's going to become 1,000%er. There's nothing wrong with taking 20, 30, 40% on a trade, especially into a heavy week of data with heavy earnings. And most importantly, for you guys that are fundamental traders, we're coming towards the end of the month. And what happens at the end of the month at every major institution? They have to do what? They have to close their books and they have to reallocate money. So remember, there's going to be a rotation of money in and out of all sectors. So keep that in mind going into this week. Kevin, I'm going to let you take over. And if anyone has any questions about any of the stuff that I showed you, or if anyone wants this particular watch list that I can share with them, feel free to ask me and let me know. I can also share with you the bond watch list and the VIX list and the VIX chart that I use specifically on the area chart, which has a cleaner view of where those levels are. So, Kevin, all yours.
Yeah, no, absolutely. Thank you, JP. It was actually, it's funny because last Saturday when we had the Saturday ticker things with you guys here on the server, actually, JP did talk about I'm going to start sharing my stream now, but he did talk about the MSOS trade, I believe, because he was talking about how there's a possibility with the amendment being passed, and lo and behold, I think in the beginning of the week, around Monday or Tuesday, that's when the calls went up, I think almost close to 70%, so somewhere between there. But so the great thing that JP was also trying to state there was the most important thing is what's it called? The most important thing is you have to realize where money can be made, right? That's the whole reason you trade. There's multiple reasons you trade, but that's one of the reasons. And yes, you can make money day trading, right? But I personally believe, and I know JP personally believes, there's a lot more money to be made swing trading, because in the end, the bigger time frames and the bigger sentiments always end up working out, and you always want to be on the bigger move, not the smaller move, right? So maybe it might be better to take a step back, and if you're just always day trading or scalping zero DTEs, such as QQQ, SPY, and all those ETFs, maybe it's worth stepping back and be like, hey, actually I should allocate some funds into swing trading, right? Because one thing important that JP did say last week was he looks at trading to be a place where you can be a money manager, right? And to put that into simple terms, if you don't have proper risk management and you don't know where to put your money, then what's the point of trading, right? Might as well give the money to charity at that point. So keep that in mind. That's why when we go over these things, we're talking about more swing based. And honestly, in my personal experience, swings can work with almost any account size, because you can, if you like, let's say you have a small portfolio. I remember when I used to do small account challenges, like there's perfect tickers like KO, right? KO has such cheap contracts. What's another example? Verizon, right? Verizon, well, no, sorry, that was Visa. Verizon has cheap contracts, right? So, you know, looking at different tickers or stocks to swing is always a good thing to do, because when you diversify and you look at stocks instead of just ETFs like QQQ and SPY, you get a lot more focused view, right? Because obviously the ETFs are a bunch of stocks that are combined into one single ticker. But yeah, so to get started on the whole ticker part, I said tickers like a million times, but avoid that. JP was talking about the Zoom trade, so him and I both got into that today near close. Reason I was looking at it was, as JP said, daily looks nice. Before I saw the daily, I actually liked the 2 hour. It's funny because the weekly, I remember JP Roddy's like, hey, look at the weekly for Zoom. It looks like it's about to go. And I was like, oh yeah, it actually does have room. And then I look at the daily. I'm like, oh shit, it does have room, but it's possibly going to go down a little bit lower before it goes up higher, right? So that's what we see here on the 2 hours, especially. You could see, as you guys know, I'm a price action trader, so I'm going to tell you about it from my standpoint. We have a bunch of wicks pointing to the upside, which if you dumb it down for yourself, which means that the sellers are so strong that they were able to push down the price, right? You can say, hey, today was still ended up bearish, so that's why. But okay, yeah, that might be the price, but regardless, price was pushed down multiple times around this area. So that's an additional thing, right? This is the 2 hour. So 2 hours is a smaller time frame compared to the daily. Now when we go to the daily, you can see if we zoom out just a little bit, for those who don't know or do know, I do have a YouTube channel that you could find the link in the link channel. But over there, I talk about how I draw my supply and demand zones. It's a very unique way that's different, but I find it pretty efficient. And I utilize Heiken Ashi when I draw these, right? So you could see here actually on the on Zoom's daily chart for the Heiken Ashi, we have a supply zone we are testing right now. So there's a possibility that, again, nothing is a guarantee in trading. You always want to find things that give you higher possibility. So there's a possibility that Zoom can retrace from its current standpoint of $72 all the way down to at least $71.80, and that's what I'm hoping for. I believe we got the November 8th contracts, so if it were to go from 72 to 71.80, that should be at least around minimum 40 to 50%. So that's what I'm aiming for here, because I like having big trades, right? As you guys have seen in my logs, majority of my months, my average option trade is around 120%, 160%. So I definitely like going for the bigger trades instead of the smaller trades. So that's what I'm hoping for. Best case scenario, we break below 71.80. You can test the levels JP was talking about, which was around like 71.27 or even lower to 69.86, right? You might be asking, hey, Kevin, how are you getting these levels? Very simple. One of the easiest ways you can find a level is just finding where it rejected beforehand, and that's a level itself, right? Because as you may or may not know, a prior resistance, if price breaks through it, that resistance turns into a support, right? So that's where you would want to aim for. You could see this general area was resistance. We broke above it, so then we can expect or possibly expect Zoom to test this level right over here, because this is prior resistance. And as stated in the last time we talked, you always want to make sure when you look at support or resistance, you never want to be like, hey, it's exactly going to bounce at 71.37, for example, right? Or exactly at 71.80. No, everything always works, because you have to remember, the market is comprised of millions of traders, and they perceive things at different ways. They draw levels at different ways. Banks draw levels at different ways. Whatever you want to look at it, things are done differently. So you can't be like, hey, this is this pinpoint level, it's going to bounce here. That does happen sometimes, but you want to look at it as a general area. So general area for anything you want to look at, support, resistance, you always want to look at an area. So this is the area we're looking at Zoom, which is between 72.05 and 71.80. All right, so that's the whole Zoom part, since that's the only swing I'm taking into next week. Now,
the 10-day simple moving average on the daily on Zoom is at 70.82. That's literally the 10 days. So it's right there.
Right here, yeah. Okay.
70.82.
Yeah, that's perfect. As you guys know,
And right below it is the 20-day simple moving average on the daily, which is 69.90, which just happens to be that area that you had talked about just a little bit. Yep, right there. Uh-huh.
Yeah, exactly. And you guys know me, I like leaving runners. So once I trim out, I usually, as you guys have seen in the How I Trade document, which is freely available to you since you guys have access to my bot, there's a link on there. It talks about how I trim majority of my position by 30 or 40%, and I like leaving runners, especially risk-free runners, to allow the trade to possibly play out, as JP said earlier, to levels that are the best case scenario, like 69.82 or 69.80, and level up here, or wherever he was talking about, the 70.82. So yeah, that's how I like trading. But
just so you have an idea on options profit calculator, assuming that, let's just use as what day is Friday? Friday is the 29th, correct?
next week?
Yeah.
No, Monday is 28th.
Oh, I'm so sorry. Monday's the 28th. Okay, so what is it? Friday the
first.
Friday the 1st. Okay.
Yeah.
So if we can get below, if we can get, let's just assume that we were to hold this trade and it goes to 71 by Friday, those contracts will still be up 16%. But if we can get below 70, if we can get anywhere between the 720 to 771 range by the 28th, those contracts will be up anywhere between 30 to 50%. Kevin,
Yeah,
just so you
absolutely.
know.
And the cool thing is like that's the passive numbers, right? Especially if Zoom is not a high volatility stock.
Mhm.
So as you guys may or may not know, when a low volatility stock gets a very rapid movement, the IV increases on the contracts, which inflates the price, which
Yep.
obviously is great for us, especially if it goes our way, right? So if we, as JP said, if we get the move to the downside, the passive estimates are going to be 30 to 50%. But if we have IV ramping up, we could possibly see 60, 70, and so on and so forth.
Yep.
But yeah. So briefly, I want to talk about, obviously what happened this week. You guys know, since you guys follow my trades, this week was very hard, right? Especially for the swings that I took. Majority of the swings were swings that I swung from the prior week, not actually this week, and a lot of them did not work out. Um, Honestly, the thing was the market was just very elusive, especially Monday and Tuesday. There was a lot of red across almost every single sector. Um, so it was very hard to have anything working out. There was just a lot of profit taking, and it was just stuff that was out of our hands. Unfortunately, there was a lot of losses. I think not a lot of losses, but there was a decent amount of losses. Let me pull up my log here, but I think you guys can see this. Yeah, so you could see one of the biggest losses was Baidu. Unfortunately, Baidu would have actually worked out really well, but unfortunately, market didn't really go where we wanted to. So my first mistake was actually I got Baidu on October 15th, and I didn't. And my dumb mistake is for some reason I took 120 calls, which is all the way up here. I don't know why I took that far of the money because following October 15th, right when we entered, Baidu went up almost like 3%, and our cons went, I kid you not, 4% green. That's it. And then after that, you could already see the shit show that I went through. Apologies for my language, but that's why Baidu didn't work out. I'm gonna go through these very quickly. The big trade, which obviously worked out really well in our favor, that I know a lot of you guys got into, was silver, and silver went up actually almost 500%, I believe, right? Whoops. Let me bring it up. Yeah, 500%. So the reason I was in silver, it's very simple. We talked about it last time. Prior resistances, they turn into supports once you break above them. So you can see the prior resistance I was looking at was 28.53. We broke above it before, we came back down, we broke above it. So now it has turned into support. We had a great candle on October 17th, and you could see the huge push we had to the upside. So silver worked out really well. I want to talk about one more loss. Which one was it? Dollar Tree just unfortunately didn't work out. That just kept on slowly climbing down, and Monday and Tuesday didn't help out. Pfizer, let me go over that really quickly. Pfizer had a great setup. As you can see, it was holding above the zone over here at 29.05. It was holding above it all the way till Friday, unfortunately. But then Monday came, and then you could see we closed very red on it. So I had to unfortunately exit. What else? And then so Chewy is a trade I got into this week. This stock annoyed me a lot because it's still in the same place. So I got in at the fact that there is a falling wedge on here, and I had to average down, and that's the only reason I ended up at least break even on this trade. But you can see we failed to break out a few times here on the 2-hour chart, so unfortunately I had to exit the rest of my position. But that's the whole rundown on the swing trades I took. Now, I'll briefly also go over the trades I took today, because as you can see, they ran pretty well. We had 205% on Tesla that I posted, and then 94%, and then 250% on Meta. So I'll go over those very quickly. So as you can see, today Tesla had a very strong price action to the upside. This is followed after Tesla beat earnings on Wednesday, right? Or Thursday, whatever it was. So you could see, Tesla ran up, and then a huge. If you guys know me, I'm a huge fib trader. So I draw out my fib right from the low all the way to the high, and I waited for. Usually, when I look at fibs, I like for price to retrace to the 61 percentile. And for those who don't know about fibs, again, our YouTube has the video as a video where I broke down, I think 2 years ago, how I use fibs and how fibs are used. So price retraced to this level. I got into calls around this area, and then especially after this candle, I didn't get on this candle. I got on this candle close. So after this candle closed, I saw that we had a great wick to the downside on the previous candle, and then the current candle closed bullish, and it did not have any weak wick to the upside. So I rolled the calls up, and you could see that all the way up here, the calls reached 250% or something like that, right? 205%, which is pretty good, right? So that's the whole Tesla thing. You could actually see near close, and near close, we got a lot of strong bullish movement on Tesla. Tesla was actually relatively strong compared to NASDAQ and other tech stocks. Like, I believe if I go to NVIDIA, you could see NVIDIA is in the NASDAQ as well, but it was very relatively weak after the morning AM session, right? So Tesla closed a lot stronger. And I was talking about, earlier in the day, I was mentioning how, the option flow, for those who look at option flow, is getting significant volume for calls. So there is a possibility that Tesla might gap up on Monday. I would have taken the swing trade, but if you guys actually look on the option chain for Tesla, the IV on the contracts are absolutely horrendous. Like for a $260 stock, the contracts that are at the money are like $11, which is insane. And I'm not going to spend that much, because if I get into this trade and God forbid it goes against me, I'm not losing like 50% just because, the IV on the contract is very high, right? So I would have taken it. I would have taken Tesla calls near close, but IV was just too high for me. The next trade that we took was Meta calls. Meta, you guys obviously know, Meta Fridays, Tesla Fridays. I love Meta on Fridays. I believe Meta is one of the most undervalued stocks when it comes to option trading, and that's why I trade it. So you could see that Meta recently reached all-time highs on October 7th, been kind of, slowly trading down. So you could see here that we kind of have like a little ugly bull flag. So that's why I'm still bullish on Meta. But if we come to, how it was trading today, it was kind of similar to Tesla, right? We opened up, we had a very strong push to the upside, and I was like, okay, as you guys know, I'm not a guy who likes chasing trades, so I like to wait for a pullback and then entering off the pullback. So what I did was, it's funny because usually I'm not a guy who chases, so I was waiting for I was waiting for Meta to retrace again to this fib level over here on Meta, the 61 percentile. But I saw this bounce over here. I don't know what went through my mind. I don't know. It was just dumb. But I entered onto the Meta calls that you guys were in for $1.35 instead of waiting for it to retrace over here. So I entered over here. Lo and behold, of course, the price retraces exactly where I wanted to, and the contracts lose like almost 50%. They went from $1.35 to 75 cents. But I reached the area I want. I took an average down at 75 cents. And from there, the contracts from the 75% fill went, I believe, like 250%, right? It went from 75 cents to $2.63. And the original fill went from, $1.35 to 263. So it's 90% original fill, 250% on the average down. But as you guys have also recalled on my how I trade sheet, the way I position is very important to how I trade. And I think it's very important for everybody to figure out how they want to size into their positions, because as JP said last week, it's very important to be a money manager, because that could be game changing for you, right? The way I personally size when it comes to day trading especially, I like leaving room to average down, especially on zero DTEs, because zero DTEs are very risky. So for example, in this trade, let's say hypothetically, I took, let's say I'm okay sizing 10 contracts into a trade, right? When I first got into this trade at $1.35, I didn't get into 10 contracts. No, I got into 4 contracts, right? I would get into 4 contracts and I'd leave room in case it retraced down a little bit more and I still see the setup. That's when I enter into 6 more contracts at 75 cents. So then the gains that I get from the average down will outweigh the loss from the previous position, right? So then that means I don't have to theoretically wait for the contract price to reach $1.35 for me to break even, right? I can actually wait for it to only reach, I don't know what the number would be, but it would probably be like 85 cents or 90 cents. So that's the way I average down. You have to realize everybody has to average down, or not average down, sorry, let me rephrase that. Everybody has different risk tolerance. Again, there's a video going based on how to look at risk tolerance and everything like that. But everybody has different financial situations. Everybody can take on a certain amount of risk. So you always have to figure out, hey, how much am I okay losing? And how much am I okay with not losing, right? Because one of the most common questions I get asked is, hey, Kevin, how much am I supposed to leave my runners, or where am I supposed to trim, right? And you can't answer that question without asking yourself, hey, how much am I willing to lose? Because if you can't afford to lose, if you can only afford to lose 20%, you think you can allow yourself to just trim at 10 or 20%? No, because then if you're only pulling a 60% or a 50% win rate, your losses are going to basically pull you to either a losing month, or a break-even month. And that's not really what we're here to do, right? We're here to excel. So you need to think about these things to yourself, because if you don't, you're always going to find yourself in the same path that you've always found yourself. So keep that in mind. But yeah, that's my whole spiel about the swings I took and that JP took, and the day trades I took this week. So
Kevin, before you move on really quick, I wanted
Yeah.
to point something out. Can you go to the daily chart
For Meta,
on Meta?
yeah.
You're a big advocate of this, and I just wanted to point this out. For some reason, people have this feeling that whenever a stock breaks its all-time highs, that it has to pull back, and there's something called a continuation trade. One of the things that you will learn from Kevin is that just because a stock reaches its all-time high doesn't mean that it's not going to set another all-time high. For example, the previous all-time high on Meta, Kevin, can you go back down to, yep, yeah, right there. Yeah, before we had that breakout, everybody's like, here's a triple top, it's going to reject, it's going to push down. And you knew that the market was trying to buy puts, but guess what? Smart money sees the flow of puts coming in, and what do? Literally just exploded to another level. So keep in mind that even though you see a stock trading at all-time highs, it doesn't mean that it has to be bearish, because a great example of a company that's a up and to the right chart, that's been an up and to the right chart since the existence of mankind, is Motorola.
Oh my God.
And
What's the ticker
just type
again?
Motorola. Just type Motorola. It'll come up.
Bro, my spelling sucks. Okay, here it is.
Motorola.
Yeah, yeah.
It's an up and to the right chart,
Yep.
right? And just keep that in mind. Don't ever think that, oh, it has to pull back. Oh, it's gonna come back down. Some companies just that. I mean, look at that. It's literally up and to the right.
Bro, I know. You know what this reminds me of? It's up 72% all the way from to October last year. This stock, actually, the chart of it reminds me of a ticker that I love trading.
ANF, up and to the
Yep.
right. Up and to the right.
Until only recently, since a lot of volatility picked up. Oh my goodness, this stock was just amazing. I got this on my long term. I got it all the way down here, like $22. It surged all the way up to like 200. It was amazing, right? By the
These
time,
are the kind of
yeah,
companies that you can buy shares, and if they have a great story, you just you don't look at it till the end of the year.
it's just like
It
that great story of the former CEO getting the sexual trafficking charges. There's that.
Yeah, I
Yeah.
I mean, it really is. I hate to say it, but these up and to the right charts, people are always trying. You know, I'm a perma bear, Kevin, right?
Yep,
And I
I
always want
know.
I want the market to die. I want the zombies to
I
come. I
know.
want, nuclear war.
Yeah, yeah.
Um, and I'm always trying to find puts, but for example, today when we were trading and I was long the S&P until I was shorted. And it's like, sometimes you just gotta follow the trend and stop trying to be the superhero here, trying to find something different, and like it- some charts just are up and to the right. And when they're up and to the right, and there's something called gamma, which we can talk about at a later time. And when there's a gamma squeeze on a higher high or a potential breakout, because the market makers are on the put side, and they're on the put side, and they're selling calls, then
Yeah.
this happens. Forget it. It's this is an example of a daily gamma squeeze where you just explode.
Absolutely, and this ties into like my whole way, the whole way of how I trade. Right, I'm a pretty stubborn person, and I know I kind of rubbed off a little bit on JP, because I know when I met him, he was always like puts, 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 but now he's looking at a lot of calls as well, and that's like ties into how I trade a little bit because you guys have seen primarily most of my trades are all calls, and the reality is because of the whole concept of a short squeeze, right? Short squeeze is a concept been existing for decades in the market, and that's why the Bulls end up winning more than the Bears, right? So it's a really great thing to keep in mind. That's why you always see my trades are primarily calls or bullish sentiment, because I like it. I mean, yeah, I know from here and there I'll have like a Zoom put trade like we did today, but yeah, that's just my 2 cents on that. Um,
I wanted to point out that someone in main chat said SN, and that's a ticker symbol that I haven't heard since the early since 23, and that's the cleaning the vacuum cleaners. Look at that up into the right chart.
Oh my goodness, yeah, this is actually so this was actually we're gonna go in order for all the tickers that you
Yeah,
guys
yeah, I just
posted.
wanted to tell you that's
Yeah,
another up into the right chart. It's ridiculous.
absolutely. Yeah, and so Carvana, I'm so glad you brought this up because this is one of my favorite stocks. I was talking to a friend of mine about this stock, and he brought it up to me when I was down back all the way to $10, right? This was all when the shit was going on, when Carvana had all that bad news, right? And you have to remember the biggest thing, the primary thing when it comes to trading is finding undervalued things and riding it till it's no longer undervalued, right? That's the whole reason we trade. That's the purpose of trading. And Carvana was one of those stocks because even though we had the very bad news, it was still a very undervalued stock. So I actually got shares. Unfortunately, not all the way at the bottom. I can't pride myself on that, but I did get it at this 53 is what I got my shares at. So you can see from $53 is all the way up to 202, and it's just been on a complete rally. Um, we actually, like, I think 2 months back or a month back, we actually got Carvana calls because I wanted it weekly to break above this, general area, not specifically this level, but just this area over here. And that's exactly what happened. You could see we've been just on a complete tear the past few weeks. Now, keep in mind the way a lot of stocks work, right? Is JP is right. A lot of stocks that are very undervalued, they have a very up and right kind of uh, chart, right? But that doesn't just mean you just blindly enter anywhere. You want to enter in at places where it's worth entering in. That's why I entered, all the way down here. This is when I think I entered. So yeah, I think I entered September. Yeah, around this date, right? September 11th. This is when I entered Carvana calls, and I did really well. I didn't just enter in just all the way up here. I entered down here, and the reason is because you want to find where you have high probability. So looking at Carvana, if you want to swing it for options, or if I wanted to swing it for options or shares, I'll look back historically and think, okay, where are prior resistances that we broke above? And that's going to be in this general area of 165.38. You could also see we have a support here. Would I really be paying attention to this? I'm not really sure. Let me see if I go back to the current price. Yeah, this is not something I'm going to be paying attention to. unless Carvana breaks this, then yes, I'll pay attention to it. But for now, the only thing I'll really be paying attention to on Carvana is, as you know, I'm not really a put guy. So unless a really great put bearish setup shows up, I'm not going to take puts. But what I would be probably looking for is where the hell is the drawing tool? Oh, if Carvana retraces down to this level, right? If it retraces somewhere nearby this general area of 165, if we get some sort of small consolidate, like a big drop and then some consolidation over here, I would love to get some calls so we could target back these levels over here of 188 and potentially 199. So that's what I would be looking at for Carvana. Any few cents on that, JP, or can I move on?
No, I was trying to figure out what was the short interest on it, but for some reason I always have a hard time with Yahoo Finance trying to
Yeah,
see
it's
what
it's
the short interest
it's weird.
on stocks are. I always forget where it is, but if this has a big short interest, this thing has another leg up. Is there an
Yeah,
Elliott wave set up
yeah,
there on the daily?
yeah. So you guys probably know I'm a huge Elliott guy, Elliott waves, because I mean theoretically almost everything works in waves, in impulse waves, and you could see that we're theoretically in the second wave right now. Uh, so eventually you might get a retracement, but that doesn't mean it's gonna happen right now. And then you're gonna have the last wave. But yeah, I do see long term. I personally see upside. I think we eventually reach 277, which is close to the all-time highs for Carvana. But I would like personally me, I would get like my shares. I'm targeting till near this area over here, 279, around that general area. But I'm gonna actually move on to MU since that was the next thing that was asked.
Ooh, Micron.
Yeah. The great thing is MU is not reporting earnings since it reported recently. They're not reporting earnings until December 18th. So this might be one of the stocks I actually look at for potential swings. So let me clear
By
up
the way,
this trade.
Carvana has a 12% short interest. I just found it, just so you know.
Yeah, so it's relatively low, especially after that short squeeze, I guess,
Hmm.
a few like a month or two ago. I guess it's just pretty low. Yeah, MU is a great stock to look at, especially this coming week. It's going to be affected somewhat by the tech stocks, tech earnings. That's true. But hey, if you're bullish on an earnings, what's a sympathy for MU? Would it be AMD, JP?
Yeah, AMD, yeah.
Anything else or no?
Oh my God, ARM.
Oh, okay, yeah. So ARM is reporting next week.
Wait, hold on, let me check. I think ARM is reporting. I
Yeah.
gotta
So
go. I
basically,
gotta look at earnings whisper the calendar again.
yeah. For you could look at that quickly, and I'll also say quickly, like basically, let's say if you want to trade earnings, I'm not a huge guy to trade earnings, but there's a concept called trading sympathy stocks, right? And that basically means if let's say Nvidia is having earnings, but obviously when companies are having earnings, the contracts are exposed to very high volatility, and obviously high IV means very high risk. So unless you get a huge move, you're going to end up with an IV crush, which means these contracts are going to end up very low in value compared to what you want, unless again you get a huge move. So what you can do instead is you could take a sympathy trade. So for Nvidia, it would for example be AMD, because they're very similar companies and they're competitors. So if and if Nvidia does really well in earnings, you usually see a stock like AMD perform really well the next day. So if like Nvidia gaps up, AMD will gap up as well. And since AMD is not having earnings that specific day or that week, the IV and the contracts won't be as high. So just 2 cents on that. But yeah, JP, did you
Yeah,
figure it out?
Intel's reporting as well next week, so that's going to be an interesting one. I mean, to be quite frank, if you're going to take a sympathy, blah 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 blah. If you're going to take a sympathy trade on the semis, it's best to look for a company that has earnings further out. I think QCOM they have I think it's much further out. Like man, I think it's like 3 4 weeks out. To be quite frank.
Oh yeah, no, QCOM is definitely something we'll go over because I like that setup. But yeah,
November 6th is the earnings actually, so that yeah, there's a little bit of time on that.
sweet. Okay, that's actually really good. But you can see here, very simple. We can just draw out the levels on MU. You can see that we closed back into a range. So we possibly might see downside heading into next week. We could possibly trace somewhere closer to the 99.54 level. I personally might take calls if it comes down to the general area of 103.99. Just as you can see here, you could see like this is a previous area where we bounced, so we might see some buying interest around this area. Again, keep in mind the way I trade is I go based off price action, so I'm not just gonna blindly enter just because it comes down there. I'm gonna see how the candles look, for the current candle compared to the previous candle, see the sizes of the wicks, and make my judgment based on that. But if I get into MU calls, that's definitely something I will post. If I get into MU calls around this area, I might get the 108 calls and try to possibly, test the breakout. But we'll see with MU. It's been trading a little bit weird. As you can see, it's kind of not really moved anywhere to the upside. So, yeah. Next ticker we'll go over is TTD. We'll go over a few more tickers and then we'll get into questions that you guys have, any general questions. But I guess TTD is another stock that's been up and to the right the past month, you could say. Have you traded this stock before?
I have.
TTD? Yeah.
It can get really ugly. It's super volatile. I mean, those options have a weird spread, and then when they go, they go.
Yeah, I mean, we did test all-time highs this week because we actually broke above it. So for me, I'm not gonna take any trade on this until it again retraces to the previous all-time high, which is around the 113.89 mark. We retrace here, we get a nice bounce. This becomes now a confirmed support. We could possibly get a really good push to the upside. Do I think it could continue pushing without a retracement? Possibly. That's how usually all-time highs work, as JP talked about earlier. Especially you could see we had a bunch of consolidation, and then today we gapped up. So you could possibly see Monday and Tuesday being ending up green, and then eventually a retracement to either this consolidation area, or what I prefer is down here at 113.89, and I'll take calls for that.
If we get that push down, which I'm just looking at Fintel here, which is kind of funny. We only have 2.4% of short interest here on the float, but they have 5 days to cover the shorts. So they have 5 more days, to push this further down before it retests that 113, and then it probably makes the next leg up. One of the things that's important to say, when the market is short, they have a certain amount of time that they need to cover. That's called the short interest ratio, just so you know.
Absolutely. Yeah. Again, that's very important to look at, especially when you're looking at what's the proper way to put this?
Less volatile, lower volume stocks.
Thank you. As you guys can tell, English is not my first language, so there you go. Okay, CCJ Cameo.
That was a great trade, and that was a great chart, and we talked about it pre the breakout. It's funny because this is part of the whole uranium, URA.
Yeah.
But Nancy Pelosi's husband loaded up on this about 2 weeks ago, and if we look at it from 2 weeks ago, he caught the bottom pretty much.
Yeah. Insane. And if you guys actually recall, not last Saturday tickers, but Saturday tickers before that, one of the people actually asked us about URA, and I actually loved it a lot. And JP talked about how uranium, the whole ETF is going to be more. It's going to have a possible push to the upside because of the whole surgence in what's it called, AI, right, which needs more processing power. So we got into calls, and that like skyrocketed to 300%. So really great trade on that one. But back to CCJ, similar outlook to UR.
Man, what a
Yeah,
breakout that was.
this
Jesus.
is huge. And then the biggest one that got the push, geez,
Lithium.
is LEU. Oh, look
That's
at
a
this.
lithium company, right? Or is that also uranium?
Yeah, I think this is. I don't know. It's
Just scroll
definitely
down a little bit. Scroll
it's
down.
it's
Scroll
it's
down.
the biggest holding in URA.
Let me see what it is. Scroll down, scroll down, scroll down, scroll down. Keep going, keep going. There it goes. It just applies nuclear. Oh, yeah, just nuclear fuel.
Yeah,
Just that. It's just that
and
stuff.
and from when we talked about it, the stock went up 73. No, wait, hold on, 73%, which is insane. Like,
Yeah.
yeah, what I can't believe. I mean, I'm happy I took URA, but I wish I got into LEU too, because LEU is the number one holding, as JP said when we talked about it, in URA. So, yeah,
Yeah.
but back to CCJ, we're coming back into a possible range here. So what we can have is, whenever price retrace back into a range, usually the movement, down is very severe. So maybe I don't
Yep.
want to take the, bounce off of 5209. I possibly could if I was feeling risky, but I ain't feeling risky. So we're probably going to come down to, I probably would take calls when it reaches 4842. In fact,
Can
I'll,
you switch that to the line chart really quick? I want to see how
yeah,
big
one
that
second.
pole is. Oh God, that sounds so inappropriate.
Yeah, yeah, yeah. Yeah, yeah, yeah. All right. Let's see.
See that
Okay.
flagpole? You see the pole? See that
Yeah.
flagpole?
Yeah, I
Yeah.
see.
So it's gonna have. It needs to. The flagpole always needs to have. What is that? Half measure retracement.
Yeah.
So what's that? 48, 42. So that would be the half of the pole, right?
Mm. Yeah,
I wonder if that's
exactly.
also a fib level. Is
Yep.
that a fib?
Let me see.
Yeah. Yeah.
Yeah,
There's your point
around that.
50.
Yep.
Right there. Yeah.
Yeah. So this ties in exactly to, like, I don't always go between the 38 and the 50, but you could see, around this area, that's where both of these fibs line up. So that's honestly where I would take calls. So you guys, I put on alert there. So if it retraces down to that point, I would love to take calls if the price action meets with my criteria. Actually, I'm glad you brought up the line chart, JP, because we talked about this last week very briefly. I just want to, like, really briefly go over what a line chart is. It's a very
Mhm.
simplified true close definition of
Thank
price.
you.
Um, and a lot of institutions and a lot of whales, they just look at this because even though smart money, people call it smart money, is theoretically dumb money because they have so much money they could just spend it on whatever they want, right? So they're not relatively caring so much about the entry, but they're caring more about the sentiment, right? So
Yes.
that's what the line chart provides them. So it gives them a very clear view of the sentiment. As I said, it's true close. And one thing that line charts are really great at simplifying, if you want to ever
Red
look at
line.
it, is trend lines. Yeah. You can see here, you just connect the tops, you connect the bottoms. You no longer have to ask the question like, oh, do I connect the wicks or the
Use the
body?
wicks.
Yeah, they don't need to ask that anymore. So, this is something great you can look at, line chart easily. It's free on TradingView. You could see here, if I switch back to candle, yeah, granted, you're not going to find, the greatest bottom entries, but you find a really great referral in terms of, hey, this is where price came to, this is where it's bounced off in this general area, and you could potentially take a lot of great swings off of it. So feel free to look at the line chart. You can also mark levels, very easily off of this, right? Like if you, as we said, it's a true close. So obviously, if you see a couple of bounces off a general area, that's a pretty strong area where you want to look at, right? So like you could just eyeball it around the
Mhm.
46 area over here. This is an area where price. I said area so many times. Geez, this is generally where price bounce and reject it. So keep in mind, there's always more things to look at than candlesticks, right? Always remember, no
It's
matter.
also using the line chart is great for seeing actual chart patterns. Like there you have like
Yeah,
a megaphone.
absolutely. Yep. Yeah, such a really good
And if you
point.
know what a megaphone is, you know what the megaphone is always going to do. You're going to trade in the bottom of the megaphone to the top of the megaphone to the bottom of the megaphone to the top of the megaphone.
Exactly. And you got the double bottom booty cheeks over here on the
Oh yeah,
on the line
nothing
chart.
cheap.
Yep. So there you go. Line charts. I've learned one thing. I've been training for 11 years. JP's been training for 20. Um, there's still things I learn every day. There's still things JP learns every day. I learned off of him. He learns off of me. So never be too stubborn. You never know a lot. You never know too much. And, always keep an open mind of learning. Because in the end, you're trying to, whatever your reason for trading is, I always believe you need to have a purpose. Because if you have a purpose, you can drive yourself to do better instead of just being like, I want to make money. Like my purpose is, I have different purposes. I want to help my parents. I want to help my family, right? I want to open up a dog shelter. So when I have these purposes driving me, I don't make dumb mistakes. So you always want to have a purpose. I don't know why I went on a whole rant, but hopefully that resonated with you guys. So the other ticker you were talking about, JP, was SSN, I think, right? Or
I
SN?
don't remember talking about that.
No,
That's my
SN.
social.
Yeah,
Yeah,
sorry.
yeah,
Yeah,
that was
okay.
no, but we already talked about that. That was someone was just pointing it up into the right chart. But SSN is your social security number. If
I
you
know, I
want to
just
give it
wanted to
to me,
see. I wanted to see if there was a stock that actually had that. But yeah, you could continue. Go ahead.
yeah, I think that they had. I'm looking right now at the Ask Bishop channel, and they had brought up in no particular order. You had already taken care of MU, TTD, CCJ. Someone was asking for Chewy.
I already went over that actually.
Okay, and then they were asking for GLW and Grab. I don't know what either one of those two are.
Yeah, sure. I mean, I'll still go over them. But yeah, really
GLW.
quickly. And oh,
Right
Shark
up in the
Ninja.
front.
That's what SN is. That's crazy. All right. Yeah, I mean, it's pretty simple. You have consolidation. I don't think I would take anything personally unless we either do two things. Honestly, just one. The only thing I'd really take is if we break above, come down, retest this, and bounce off of it. Reason I would have said, oh, I would take it down here, but if it approaches here again, there's a higher possibility we actually break this, right? So I don't want to possibly take it here. I want to take it probably down in a safer area, maybe around 98.86 or 92.03. So around these general areas would be where I would look at calls for SN. Meanwhile, to look over the last few tickers that you guys requested, go ahead and ask, and you could ask any questions you have in the Ask Bishop channel, and both JP and I will answer that for you. This could be about trading or anything in trading in general, but it's very important. This is free, so definitely ask us because
Holy,
it's free.
holy
So
crap. Look at GLW.
GLW, is that one of the
That's one of the
tickers?
things.
Oh yeah.
Look at this. Do you know what they make? They make the glass for the desktop monitors. Like, oh God, you see like people just invent things like the scrunchie and become millionaires. I'm over here trading. Jesus Christ.
You could hear the little age in JP there, Mr. Dinosaur. But yeah, um,
Look at this, bro. They make the glass for the. Oh my.
I mean, this is reaching all-time highs. The previous all-time high is way too close to the current price. I'm not taking anything here, so I only probably would take it if I would personally only take calls if it reaches 41.69. Puts look great on this though. Weekly looks great for puts. Daily looks great for puts. I bet if I go to 2 hour, 2 hours are a little bit iffy because we're getting a lot of small candles. So maybe the perfect entry for puts is gone. But daily, maybe if you were to get time on the contracts and not really care if you're down a little bit, maybe these could work out. But right now, I think it's just too late to enter puts and too high to enter calls. That's just my personal opinion on GLW. I'm gonna look at GRAB. No idea what that is.
Grab. I have
Grab
no idea what this
Holdings.
is either. Grab Holdings enables millions of people each day to access its drivers and merchant partners
Oh
to
my
order
gosh,
food, groceries, and packages.
this chart looks like Baba. Jeez, look at that range. We had this range since 2022. Oh my goodness. But we actually broke above
We
it.
broke out. Yeah, we broke above the range.
Yeah, and actually now you have a very important test for this stock, right? You're testing
Come
this.
back, retest, yeah, retest that, and
Yeah.
then if it tests that, and if it breaks, oh my goodness.
Yeah, if Monday comes and you see this stock having a bounce or a gap up, there is a higher probability, I'll say in my opinion, that you continue to, excuse me, you continue to the upside. I don't know how these contracts look like or how they move. It
I
is
don't know, but
technically.
I kind of feel like taking these $5 contracts.
Oh, oh, so there are options for it. Okay. Um, but yeah, I like the calls on this would be nice, especially if it has that bounce. Because again, this is very undervalued, right? I don't know what this company does, but just looking at a technical standpoint, you have a very strong breakout. You could see a very huge pickup in volume, and now we're retesting in not a very strong manner, so which is good for the bullish side, right? We're testing the breakout point, which is 404. If you get a good bounce on Monday or Tuesday, you could probably test this, passively all the way up to 432, or if you get time on these contracts, all the way up to 487. So this is a really good find, and I'll honestly add this to my watch list.
Yeah, unfortunately, it's one of those companies that I'm gonna have to now go research all night now.
Oh
Thank
my
you.
god. Ah, great. Here comes the chaotic part.
Here comes NFT. I think Grab is like Uber at Asia. NFT.
We actually got asked for Google. Before I get into the questions, is the last ticker we were asked. Google, as I said a few weeks ago, Google is a lagging tech stock. What I mean by that is relative to other tech stocks, Google is very low in price, so it is theoretically, again, emphasis on theoretically, overvalued. If we look at Nvidia, we add that to comparison. We add Meta to comparison. We add AM. I don't know if AMD would be a great example. And then what else? Yeah. So okay. So you could see. Okay, this messed up my chart a little bit, but you could see here this bottom thing is. Let me make this actually a line chart. The white line is Google, and you could see relative to all the other tech stocks, especially to compared to the pink is what is this, Meta,
That's
right?
Nvidia.
That's Nvidia. I'm dumb. Okay, so that's Nvidia. So this is Nvidia. Pink is Nvidia. If magenta is
Click on the little arrow with the 8 on it, and it'll tell you what each thing is.
oh, thank you. Okay, Nvidia's whatever this color is. Meta is magenta. AMD is purple, and you could see Google is a very low relative price compared to all of these, and they haven't had the most bullish sentiment. So, and that's of course because of the whole, news and the whole rumors about,
Can you
not rumors,
can you
but
show that chart again really quick?
oh, you want
The
me to
one you
pull
just
up the
the line chart you just did.
okay,
The
all
one
right,
no, you were the one where you were showing everything together.
yeah,
You have it on the top.
no,
Yeah.
I deleted it. Let me bring it back
Oh,
up.
okay, and just put Meta. To be fair, move the chart so it shows January 2024. Does it include the November? Yeah, you're just gonna have to move it just a tiny bit right there. I just want to see something in comparison. Yeah, just use it. Yeah, just use that. So this year alone, that's Nvidia's Fuchsia. It's up 137%. What is the purple?
This
Is that no, the one underneath it. Is that AMD?
this is Meta.
The one all the way at the bottom.
Oh, all the way on the bottom is
That's
AMD.
AMD.
Yeah.
So AMD is down 10% for the year.
Yeah.
Is that correct? No.
Wait. Yeah, it is. See, that's what I was saying. AMD is not a great example because I'll go on to AMD's chart over here.
It can't be down 10% for the year.
It is down 10%. Oh, let me see.
It's 10% from the highs. It's down 10% from the highs.
Yeah, where's January? Yeah, yeah, Silk is down.
That's
And this is what I was saying. AMD is not a great example because it's actually technically in the same boat as Google, right? Very undervalued, lagging tech stock. All the tech stocks are going up, and as you guys have clearly seen, money is not is shy of rotating away from tech. So if money still wants to remain in tech, maybe stocks like Google and AMD
Hmm.
would be the great place to swing trade or buy shares. That's what I'm personally doing. So yeah,
Oh my goodness, someone is asking for Adobe. Jesus.
Adobe,
Oh my God, I've
Microsoft.
lost so much money trading Adobe.
Let me. Okay, so we'll look at actually. Let me look at the. So yeah, for Google, it's really great. It's holding above this 163.40 level, which I've been having for quite a while now. If we break, when's earnings? Earnings is Tuesday. Oh shit, it's Tuesday next week. I forgot. So if earnings is great, the upside potential for Google is amazing, right? If I draw the fibs over here and we just, oh my god, let me,
Oh my God. Oh my God.
yeah. So if Google it does great on earnings, that's should be theoretically an easy test of 174.93 or 175. You could say that, right? You might have a retracement off of that, and eventually 182. And what this would start becoming is a huge Elliott impulse wave to the
The one,
upside.
two, the 1, 2, 3, yeah.
Yeah.
This is two. This would be two.
Yeah,
Yeah.
so if this breaks up, this would be the second impulse wave, which if you guys don't know, when it comes to the impulse waves, the second impulse wave, so 2 to 3, is always the biggest one. The smallest one is 0 to 1, and the second smallest is 4 to 5, and the biggest one is the 2 to 3.
You mean 3 to 4?
No, 2 to 3.
The three, yeah, 3 to 4 is smaller than 4 to 5.
What?
2 to 3, four to
2 to
five.
3.
You said this. What did
Oh,
you say?
okay.
Is
Okay. Yeah, all right. Yeah. No, you're right. Okay, yeah. So yeah, exactly what JP said. Um, but yeah, that's something you want to look at. Google's great, but do keep in mind, if you do have the downside to Google, which is relatively low compared to the upside.
oh my,
But I would say the downside to Google would potentially be down here 157.50. Do I personally think we would break the below this? No, but if we do break below this, I think there's a very
147 was what we were getting shares. Remember?
yeah, exactly. So this would be a
We,
perfect
we
place for a
couldn't
double
get. We
bottom.
had a hard time at 157. We didn't know what to do there.
Exactly. So either way, I think Google's bullish, and I would love actually for Google to retrace here, because if it retraces here and bounces, the
Um,
move to the upside would be actually very strong compared to
you
the
load
move
the
to the
boat at
upside now.
147. That's 100%.
Yeah, exactly. So
I, when if we don't, well, let me see what else. What other tickers? We have Adobe, and then I have two tickers for you to go over, and then I think we'll just check if anyone has any more questions. But I got two good ones for you.
yeah, sure. So Adobe, over that very quickly. Uh, Daily has an ugly falling wedge. You could see that over here.
Oh Lord, I didn't even see that.
Yeah, and then and the great thing is you are coming. When's earnings? Earnings is not actually that
That's a
close. It's all
falling
the way.
wedge. Wouldn't that be a descending triangle?
Well, there's no bottom resistance that it's testing.
Ah, you're right. You're right. You're right. You're right.
Yeah. For what JP was asking is, descending triangle. You need, as you guys know, you need price to
Yeah,
go
right.
like this, right? It needs to be bouncing off of support. So, but anyway, so the great thing about Adobe is if you are in calls currently, you can see that this general area
Look at that. Yeah, look at that.
is
Supply zone.
right. Yep. Only thing that sucks is, heading into
Handle.
next week, you do have earnings for other tech stocks, so it's probably going to be a lot of consolidation. But Adobe is something I'll definitely keep in mind because, again, it's not having earnings, so the volatility would be relatively low on it. So, yeah, this is a great setup for potential calls. The downside is obviously down here to 456. But again, I look more for upside trades, so I would be looking at that. But what are the two tickers you want me to go over? And
So
again, you guys
I
can
will.
ask your questions, and we'll get to them after JP's two
So
tickers.
BA.
Oh, yep, I've been in this too.
Yep. Here we go. We're back at it again.
You can look at my maniac drawings of all these channels.
You don't want to see mine. Jesus Christ, bro.
Very
Mine's is
simple.
horrible. Mine's is a
Uh,
mess.
let's see.
Jesus
Go
Christ.
ahead and tell us why you're in BA, and I'll tell why I'm in BA.
I'm not in BA.
Oh, you're
I'm
not in
not in.
BA.
I didn't take it, but like, so a little bird told us that it looks like the new agreement to the union is going to be sent, and that there's already been a backdoor handshake that says that they're going to accept it. Um, we kind of got a lead on that earlier today, and we were like, okay, well, let's see what price action does. It didn't break out of that falling wedge, and then there was news that one of our traders, Silent Hill or Silent Tree, right when we were talking about that, BA announced that they were looking to sell um, their space travel or space whatever it is division, um, and get it off their books, and that created a little bit of bullish momentum. I do still believe that the union is not going to approve this deal until after earnings, and it just happens to be that earnings are right around the corner. But I also don't doubt something very interesting. I wouldn't be surprised if, in combination with earnings, Boeing also announces that they resolved their issues with the union workers. So again, tinfoil hat, but everything looks set up for that to happen.
That's why we like you, JP.
Combination of things with news, you know?
Yeah, I mean, hey, the tinfoil hat works sometimes, right?
Yeah.
The great thing is when JP brought this to my attention, the whole BA thing. You could see here on the weekly chart, we do have another falling wedge into a demand zone. Um, I don't remember if I got calls with you guys for BA, but
We
I
did.
definitely,
We got shares, we got calls, we did
yeah,
everything, and the shares would go up 5 points and come down six and go up nine. It was just horrible.
yeah,
It was
like
it was torture.
I still have my what's it called? My shares still, but
Equity.
I don't have any options on it. But you could one thing I did like is the fact that Boeing had earnings and it didn't do well in its earnings part, but apparently did well in its revenue.
That was the September earnings.
So
The
what's the
earnings are
new
coming
earnings?
up. What were the
This is
new earnings?
this is
Oh yeah, yeah. I'm so sorry.
yeah,
I don't
here,
even know
yeah.
what it was. The period ending with September 23rd. Yeah, you're right.
Yeah, it's our bedtime. I know. But yeah, like even though it did bad on earnings, it didn't go that down like too much, right? Like I was expecting, hey, if it goes down, if it does bad on earnings, I could get the double bottom here.
Wait,
If it
when did they
retraces.
report earnings? Was it on Thursday?
This was on Wednesday, this
On
past
Wednesday?
week.
Oh my God, that just the revenue beat actually. I wasn't aware of that.
Yeah, revenue beat, estimate, and the earnings did not. But yeah, this is something great to look at. Um, but perfect. Okay, let me rephrase that. I would find the perfect entries to be right over here for potential double bottom.
Mm-hmm.
Um, and that's technically it. I mean, anything else afterwards would be
Kinda,
chasing.
kinda. If that, if that didn't become a double bottom, could that technically be a H pattern
No, because H patterns,
on the
the
daily
way.
if it breaks through it?
No. Because H patterns, first of all, I mean, the descending price is not great, but even if you consider that, an H pattern is great when there's consolidation at the top, right? And there's not
Oh,
enough
okay. So you
consolidation
want
on
you
top.
want to round the top. You want a
Yeah.
perfectly rounded top. I always consider an H pattern, like for example, right there, despite having that green candle or white candle for you, if we come back down on the daily, it would form like an H, you know?
No,
What the?
sorry. Let me bring back Boeing. My bad. I just wanted to make it red and green so it's easier. But yeah, you were saying?
Yeah, like right there, you see that green candle. If we were to just have another red candle and then it just comes all the way back down to 45. You see like that kind of an H for me. I mean, I
Yeah.
always have I always identify H patterns like that. I don't always have to look for perfect round tops, but now that you said that they need to consolidate at the top and come back down, it makes more sense.
Yeah, because if you look at it from a price standpoint, and you guys always keep on hearing me, I always say, in order to understand price, you got to make the whole price action as a story, right? You got to make sense of it, as cliche as that sounds. Think of it like this way, right? If you have a descending price and a really strong bounce, and then you have consolidation, like a consolidation period, like I was talking about over here, that theoretically means the buyers are not strong enough, right? That means even though they're trying to push it up, the sellers are pushing it down. So then there's more probability that for the continuation to the downside, versus if you have a movement down, sharp bounce up, and then a rejection. That just
Hmm.
means that could mean two things, right? It could mean, of course, the sellers are really strong, or that could just mean the buyers just stepped out because they wanted it to come down to this area where they would buy again and then push the price up. So that's why I always wait for the consolidation. I'm like, okay, that's an H pattern. Versus if it's a very sharp trajectory like this, you can avoid yourself getting a fake out and entering puts over
Got
here.
it. Got
So
it.
yeah, yeah.
I
I'm
have,
glad you brought that up, JP.
yeah, I have, and I now give you the gem of all gems for tonight.
Yeah, yeah, yeah. Go ahead.
EQT.
Oh my God, what ticker does this guy bring come up with?
You're welcome.
Yeah, that actually does look good. Um, I hate you for that. uh,
This is a nat gas play.
actually looks
This is
really
nat.
good.
This is a natural gas trade, and it just happened to be that towards the end of the market, Blackstone was in talks to acquire a pipeline stake, uh, EQT's pipeline stake for $3.5 billion. I like trading nat gas during this time of the year because obviously you need nat gas to heat your homes during the winter. And I think I was actually in this trade and I got stopped out of it. I think I was too early. And can you tell when I got in? Can you see when I got in? Can you guess?
I bet you got in
Ye-
over here.
Yep, yeah, I guess where
Yeah.
I got in. Yeah, I got
Yep.
in there and it didn't go. And now it's
Yeah.
doing it. I believe that because of some of the chatter that I'm seeing in the energy sector and with everything that's going on in the world, and because I do think that we're gonna have a very cold winter in the Northeast, I do expect nat gas prices to go up, and I'm gonna look at the nat gas futures right now. Just bear with me, because you know me, I like to here we go. NG is nat gas. NG1. Yeah, I mean, I think we can see nat gas back around 380, 390. And if you look at nat gas futures, yep, the Henry Hub nat gas right there. Look at that setup on the daily.
Oh,
Nat gas looks, yeah.
yeah.
So nat gas looks ready to go. And again, this is one of those typical, yeah, you see that top?
I
You can see
do.
that trend line. Yeah.
Yeah, yeah, I do.
I believe that this is going to be something that we could theoretically look at taking a trade on and having a decent amount of time on it and getting cheap contracts and making a really good profit. Because the thing with nat gas is that when nat gas goes, it goes.
Yep.
It doesn't stop. It just goes. You know what I mean?
No, absolutely. This is actually a really great find. Um, the only thing that sucks, man, is I wish you should have found this earlier because I would have entered right here, or at least this candle. Um,
Well, here's the thing. I've been
bull flag looks nice though.
unfortunately for me, I've been waiting for those trend line break confirmations because as you can tell, I have a little bit of a different trend line. I'm using the top of the wick of the other white. Yeah, uh-huh. Yeah, and then yep, there you go. Yep, that's exactly it. So I wanted a break above that trend line, which we got today. And
Yeah.
I think that before you can go long, you need to get above 38.16. You have 39.80. I have 38.16 as a level on the daily. You can see it as well if you were to draw a horizontal line. If we can get above that, yep, 38.16. A little bit lower. Yeah. If we
Yeah.
can get above that, I think we just rocket to 40. And I think that the $40 calls for January, those would be the trade.
No, absolutely. Yeah, no, I'll definitely keep an eye on this. Add this to my watch list. But yeah, this is actually pretty good. This reminds me
That's
of
my priority trade. That's a priority trade for next week, by the way. That's my psychotic tinfoil hat situation.
dude. I mean, this looks similar to URA, but we're heading
Mhm.
on to 11:30, so we're gonna head to the questions now.
Sure.
Um, yeah. So let's see, what questions do we have? All right.
What do you think AMD will do next week?
What do I think? Well, JP, that's you, not me.
You want me to answer that?
Yeah, I don't know much about company business, guys in hats kind of thing. You do. So what do you
AMD.
think AMD will do
I'm going to tell
realistically?
you what I think AMD. I think AMD is going to give. I think they're going to report positive earnings. I do think that they're going to give weaker guidance because, unfortunately, and I am not a fan of Nvidia. I think that Nvidia's market share has just taken over the world, and their new chips are the way of the future. I love Sue Lee, whatever her name is. What's her name?
Are you talking about the CEO of AMD?
Yeah, Lisa Su. I mean, I
Yeah.
love that. I love that woman. I love Lisa Su, and there's that ongoing joke that we have in our chats. Oh my God, if I saw that woman at a bar, oof. But
Oh my
Lisa
god.
Su, I think she's incredible. I think she's a great CEO. She's a mastermind at what she does. But you do have to accept that AMD is you know AMD's a 6 out of a 10. She's a 6 right now. She's not a 10. She's not sexy. They don't have the capabilities that Nvidia does. They're not getting the orders that Nvidia is getting. They're just now trying to get the AI chips up to par with Nvidia. And I think that there's other companies that are going to start to outshine them. Are they going to give good earnings? Yeah, because it's AMD, but I think they're going to have weaker forward guidance. The one thing that I would be looking for is their delivery order, their their forward deliveries, and their guidance. That's the most important thing. You want to know how many chips are being ordered, what's the backlog on the order, and what's the expected delivery time. Once you have that, and if the guidance comes in a little bit under, I think we see the stock all the way back. And I hate to say it because I don't want to do this to my girl Lisa. I would I think we go back to 120.
What? Oh,
Right? Oh yeah.
I mean, I
Oh yeah.
can't completely reject that idea.
I think we go all the way back to 120 because all you need is one bad miss on a company like AMD whose forward PE ratio is way above what it's actually valued at, and it's downhill from there. If you actually look at the AMD chart and you look at the volume profile, you can see the huge volume gap that it has.
That's
I
true.
mean, there's nothing stopping it. 120 would be the real stop. Yeah,
Yeah.
I mean, it's literally there. You'll have that pause right around that 135 mark, and if it doesn't hold, it's going to 120. So what's going to be the knee-jerk reaction? A miss, you go to 135, and then the next day you're going to have a continuation sell-off. And to be quite honest, if it comes down in the next couple of days and then pops back up, do you see that potential head and shoulders?
Oh my goodness! Don't tell me you're JP. I swear, if you're talking about this one right now, I'm going to kill you. You're not talking about this, are you?
Maybe I am.
Oh my god! Someone get this guy out of the room. It, no, I don't want this to happen, bro.
I don't want it to happen either, but that's a potential. Again, I'm not. I don't want to. take anyone away from whatever trade they want, I'm just not going to be in this position because I'm leaning towards the bearish side, and I don't really want to be bearish going into seasonals in November, December. But like I said, all we need is one bad miss from a company like AMD, and it's see you later.
Yeah, no, absolutely. And JP, if you don't mind, I actually had to go fill up some water. Meanwhile, could you very briefly go over, because I know, like, I didn't know this until recently, like, when it comes to earnings, could you talk about exactly what is important and, like, talk about, like, what guidance is, if you don't mind?
Okay, so the biggest thing that you want to look for in guidance, I'm sorry, the biggest thing you want to look for in earnings is you have top line and bottom line, right? You always want to have a beat on the top line and bottom line of the earnings. Um, you also want to see what is the net cash flow that the company has, right? Because you don't want to have your money invested in a company whose literally its bankroll is decreasing quarter after quarter, right? You want to make sure that the the revisions on the guidance make sense, right? Because what ends up happening is you'll have a company that says, um, "Oh yeah, we're gonna revise our guidance to XY number," right? Well, if they revise their guidance down from the last quarter and they far exceed that number, did they lower the guidance on purpose so that the next earnings would be a beat? So you want to look at that. When we talk about guidance, what we're referring to is what is the company's expectations for the future? Are they still seeing a positive inflow of cash, or are they seeing a negative inflow of cash? Are there more customers? Are there more subscribers? Is there more demand? Um, Most importantly, the one thing that I really look for when I talk about guidance, right, is where are they in comparison to their competitors, right? So, for example, you'll never see this. You have to read the entire earnings report, which is always a pain in the ass. But if you ever are bored and want to read 100 pages, you want to see what is their comparables, right? What are their comps to their competitors? So, okay, forward guidance of NVIDIA was this. Our forward guidance is this. Where do we compare in a percentage wise to their growth, right? So that's really important. Um, but to be quite honest, the most important thing for NVIDIA is going to be the technology, AI, 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 and AI. That's all that's going to matter. Followed by forward
Yeah.
guidance, and that's it.
No, dude, that's perfect, man. Because I know for a fact, like, people don't really know much about earnings, so I'm glad you talked about it.
Yeah, I mean,
Yeah.
I got a message from someone, like asking what's the difference between top line and bottom line. You know, the bottom line basically represents a company's net income. Okay, that's all you want to know. Just keep in mind, it's one is net and the other one is gross, and that's it.
Yeah, no, thank you, JP. Um, so that we'll get to the next question, so we can wrap it up soon. And again, you guys, like, this is free. We do JP and I do hold paid one-on-ones, but that's another story. So whenever you want to take care, advantage of these free education, you definitely want to look at it. But the next question was, how do you know when to continue holding runners after they hit your price target? But just 1 second.
Well, I'll tell you how I know if there's a continuation pattern
Sorry. Yeah, go ahead.
I'll tell you how I know is if there's a continuation pattern to the upside, right? Once you hit your PT, if there is a pullback and you hold support, then you know that you can continue in your runners. Now, if you break support, that's when you technically are just going to get out of the trade or just let it hit at break even. I'm not a great, I'm not great at holding runners. It's always been a problem of mine. I like to take full profit, but Kevin can better explain about the concept of support and resistance on runners.
Yeah, absolutely. I know, I keep it very simple, and you guys can refer to the How I Trade document. Let's say, for example, I'm in, I don't know, since we have AMD pulled up, we'll just look at AMD. Let's say I'm in AMD calls, and I want to reach 159.42. Let's say it hits up there. It does not matter what percentage my contracts are at, even if it's at 15 or 20%. The second it hits there, I'm at a majority of my contracts. What I would like to do is, if I like to hold risk-free runners, basically meaning that the prior profits of the position outweigh any potential loss I could get with the remaining position. So I like to put myself in that scenario. So if it hits the price target, I get, let's say, 30 or 40%. I scale down to risk-free runners. If it hits 20%, it's very hard to be in risk-free runners, but I would scale down to runners and I would see how it goes. I also like seeing how the price action is. If it rejects very hard off the level, then I try to reduce my position even more. Because again, I don't want to let a position that was green end up red. So maybe you can ask the questions like, where would I want to keep my stop? Once it reaches a certain level, maybe I want to put my stops at break even, or I trim some and then I leave the remaining of my position at 20% loss, so I can leave my trade room to breathe. But yeah, that's definitely a good question. The next question is, Sal, talking about the 2 hour when you were talking about swings earlier. What time frames do you prioritize for the swing trades? Very simple. Let me just clear the chart on this. When it comes to swing trades, the easiest time frame, I look at first is the daily. I then usually move on to the 2 hour to see how it is, the past few days. And then I look at the 30 minute. The 30 minute is my personal favorite time frame, just because you get a lot more information when you zoom out. And you could it's almost like if you zoom out and you scrunch it up like this, it almost kind of becomes into a little ugly line chart, right? And as we said before, the great benefits of a line chart is you could be able to draw trend lines easier, spot patterns easier. So that's why I like the 30 minute. And for example, like if I was looking at AMD and I was like, hey, AMD was making lower lows, but it recently just made a higher low. No, wait, what? No, higher high, right? Which you cannot spot on, for example, the daily. So that's why their time frames like the 30 minute would pose a benefit versus the daily. So it's great to look when you're looking at a ticker you like. Let's say you like a daily setup. It's really great to look at, possibly the 30 minute, because sometimes even though daily is looking great, the 30 minute could look more like this, right? And it's just consolidation near top, which means that there's a higher probability that the next day, once market opens up, you probably will have a gap down, because that just means that the strength is weakening up at the close of the previous day. If any of that, I'm pretty sure I explained that very easily, but yeah. Next question is, do you guys ever use Ichimoku Cloud Indicator? No,
I used to use Ichimoku. I was an Ichimoku trader.
Oh yeah, well yeah. No, I personally haven't. I tried to not use any indicators except volume and then VRVP, which is just volume by price. But yeah, I don't use it.
Yeah,
JP, your personal thoughts on it?
I mean, Ichimoku is to me by far one of the best indicators to trade. The whole concept of the Kumo cloud is phenomenal. I think being an Ichimoku trader, having come from being an Ichimoku trader, Ichimoku works in certain markets and it doesn't work in certain markets, because there's a lagging oh god, when conversion crosses base, and the lagging indicator sometimes can throw you off. but I love the whole concept of the Kumo cloud. I like to compare Ichimoku as a more sophisticated version of EMA Ripster clouds. Um, but I mean, I can about Ichimoku for hours and hours. I stopped using it and I just wanted to have a cleaner chart. I thought it was just way too much stuff happening, between RSI and volume, and then the Ichimoku cloud and the Kumo cloud and the conversion crossing base. Oh my, I don't want to talk about it.
Yeah. Well,
Ichimoku works. Ichimoku works perfectly uh, on the 4 hour. By the way, it's the 4 hour on Ichimoku is the best time frame to trade it on.
in your opinion.
No, it's a proven fact.
Oh, okay. All right. Fine. Again, disclaimer for you guys: we're not financial advisors, of course. Well, next question is: would you buy more cons when the trade works in your way, especially for the trade when we enter light or starter position? So it's a really great question. I'm glad you asked. If I get into a starter position, I'm only leaving room to average down, and that is it. Same if I get into a full position, I am not going to enter once there's a breakout. That's just not what I'm gonna do, because I don't like getting into a position that's already profitable, because that concept just makes no sense to me. Why am I risking more money in a setup that, yes, it could have more room to the upside, but it has less room than it did when I entered? You know what I mean? So I do not enter when it breaks out. Yeah, I did explain the Meta and Tesla trades, which you can review in the recording once I post it. But I'll give you guys a minute to ask any last final questions in the Ask Bishop channel, because I haven't had dinner and I'm falling asleep, and I can tell that JP's falling asleep as well. So feel free to put in
What
some.
time?
It's past your bedtime, 11:48.
Jesus Christ! It's 12 o'clock. Oh my God.
Yeah. Anyway, any last questions you guys got? I'll give you guys like 30 seconds or so to type them out in the Ask Bishop channel.
If while we're waiting to check, just left a message. Do me a favor, check your personal message. Out to get it, send you a message. He sent me one as well. I don't know what happened and why he got detected like that. So just if we can square him away, you'll see the message.
Yeah. I'll look at it after.
Okay.
I just saw it.
I got shook out by a bull trap today. Any way to know what that is while it's happening? Price action.
Wait, so got, hold on. So you got shook out by a bull trap, meaning you were in puts or calls?
He was in puts, and there was a bull trap setup, and he got
Oh,
taken out.
okay. It's very simple. You have to. Okay, you know what? I actually like this question because I can give you
Yeah, show a
really.
bull trap and show it with the volume so they can see how volume it work when you ever see a bull trap.
Yeah, no, I know exactly what you're saying. So I actually caught. You guys might know I trade futures as well. I got caught in this bull trap. So let's say theoretically you were taking, puts around this area, right? The bull trap was here because you obviously have a push to the upside and it broke down. The easiest way to say, hey, it's still, what's it called? It's still bearish is by the simple answer, just looking at a bigger time frame. If you switch over to the 30-minute, or even if you switch over to the hourly, if I hide everything right now, you'll see, right? Once Nasdaq broke up here, this was just a pure shot up, right? And then you were followed by a very indecisive hourly candle. This means there's no, yes, you could look all the way back here and say, hey, there's a level here, hey, there's a level here. But over here in this climb up, there was no there was no like pullback, right? There was no like cool off before a continuation. There's nothing like that. So whenever you have these bull traps, you could realize that, hey, if it continues to the downside, the fall is going to be very steep because there was no consolidation period or no cool off period or any bull flags in this ascension of price or this rise in price, right? So, whenever you have a steep push up, usually there's a steep push down. Not always, but just keep that in mind. If price does not look like this, if it looks like this, then you might have a fall that's like this, right? Versus if you have a steep price like this, it'll most likely look like this, which it ended up doing in the end. But yeah, hopefully that answered your question.
Blow off tops are very scary because so for example, I can see how someone would say, "Oh my God, it's a bull flag." That ain't no bull flag. Look at the decrease in volume. Lowering volume, price was pushing up, came right back down. It tested a 5-minute trend line. Look at the volume decreasing on that pump right there on the 5 minutes. And then boom, it just goes. And if you have VRVP if you have volume visible range profile on your chart, you can see to the right of Kevin's screen, there's this giant hole in between those volume gaps. Volume is just going to suck its way all the way down to the next area of volume spikes. Right?
Absolutely. No,
this
absolutely.
is another example of confluence of multiple indicators showing you what's going to happen.
I'm very glad you bring up the VRVP a lot because that's one of the favorite things I like looking at. And yeah, price always melts right through a volume gap. That's just a fact majority of times. Last few questions. We got Palantir. Palantir is having its earnings when? Not anytime soon.
Oh, God,
wait,
I
no,
don't even
hold on.
want Palantir.
Yeah, JP's pissed off at Palantir. He's got his own reasons, but probably because he had it at $17 and he didn't take it.
I don't want to talk about it.
Yeah. I'll talk about it. Well, I have. Listen to this, guys. I have an average of 680 as my fill for Palantir, so it's been freaking amazing. But
What the hell?
Palantir is having a huge surge into. I can't believe it's at $44, but it's having a huge surge into earnings. Again, I'm not a huge fundamental guy, but there is a possibility. I would say, in my opinion, there's a good possibility Palantir is gonna do well on its earnings. I think the limit, not really the limit, but the close target here for Palantir would be $50, and then anything after that is just a short squeeze. Especially since we're reaching all-time highs, right? Did we surpass? No, we actually touched all-time highs today. Yeah, so this is at a very interesting spot. It's more of a gamble to just enter off of this. Again, you know what I'm going to say right here. I would rather wait for a breakout, retest, and then a bounce and a break, and then continuation.
The reality is that the target on Palantir, if you just draw the fibs, I mean, I hate to say it, but it's 64.32. And I want to die. I'm dead inside.
It's okay, JP. It's okay. We all make mistakes. Well, yeah, the passive is 55, yeah.
55.44 for me, but I have 64.32 and 68.91. Oh my
God. What was I gonna say? I would personally trade this after earnings. That's what I personally would do. Just because you're on the safer side. Because keep in mind, Palantir's gained a lot of attraction. Granted, I'll zoom out. Look at this chart. This literally looks exactly how Carvana looked, right? So you have this huge consolidation period, and you start having this up to the right chart that you're looking at over here, and that's why I've been bullish on Palantir, just like I was bullish on Carvana. But do keep in mind, Palantir has gained a lot of attraction the past month, and what that means is if Palantir does do bad on earnings, the downside is pretty huge. Yeah, because people are very dumb. They're going to panic. The first target is going to be 32. They're going to panic if it reaches that, and then you're going to find 27.42.
25.50. You got 27, 25.
Yeah. So 25 right around here. Yep. So Like if this was a regular stock that wasn't so hyped up, and I hate hyped up stocks, but if this was not as hyped up as it is, then I would be like, hey, if it does do bad on earnings, okay, it might go down like 10%, but this has room for how much percent is this?
I can't even do the math, bro. 20.
27
Oh
to
my
40.
God. Oh my God.
Yeah.
Please come back down to 25, please.
Oh my god. Of course you say that, but okay. The last question was, could you suggest best materials to read for technicals? The most simple is I grew up. I started 11 years ago, so 11 years ago, YouTube didn't really have free material as there is now. And everyone's like, "Hey, buy my course." Back in when I was 12 years old. But nowadays, I think YouTube is oversaturated in trading material. I think it's a lot of beef bulgogi kind of traders. They just don't know what they're doing. You put them on the grill. They think just being on the grill for like 1 or 2 months makes them perfectly good to eat. But hey, guess what? They're really not. So I would kind of stay off of YouTube. I think observations and reading books is a really great way. The books I personally read were Richard Wyckoff books. They're very old. You might find them. You might think they might be outdated, but they're really not, in my opinion. So they're a great read. I'll post the books that I personally read uh, later tonight. And I know JP likes the Trading in the Zone, I believe, right, JP?
That's more, but that's not a book for technical analysis. That's more
Oh,
of a
that's
book
true.
for psychology. But if you guys really want to read a if you're a novice trader, like if okay, let me correct myself. If you are a trader who has an appreciation of technical analysis, but is a novice at a lot of the concepts, there's a great book by an author called Jack, like Jack, Jack, and Schwager, I think is his it's Schwager. Is it Schwager? Yeah, Jack Schwager, and the book is called Getting Started in Technical Analysis. It's it's very elementary, it's very simple to read, but it literally tells you everything you need to know, especially on a much more um, the linguistic approach towards technical analysis for this book is very understandable as opposed to like reading, what was that book that I read that I wanted to throw up and I didn't know what the hell I was doing at one point. I think it was Systematic Trading or something like that. I was like, what am I doing here? You don't want to overprogram your brain. Systematic Trading of the Financial Markets. I think that's what it was called, and I wanted to die. Um, so yeah, that's a great book. It's once again, if you guys want to know what it's called Getting Started in Technical Analysis by Jack Schwager. I think they have a paperback. It's pretty cheap.
Oh, it's pretty great. Yeah, and I'll also put like since you said technical, sorry, I usually on a typical day I have like two brain cells, but since it's near 12 o'clock, I have like 0.2
By
right
the
now.
way,
So
most of these books on technical analysis are really old.
oh yeah,
So
they are.
don't,
That's good though, right?
yeah, I mean, they're like 20, 30 years ago. You know what I mean? And don't read books about systematic trading or anything like that if you have no idea what's the difference between a descending triangle and a falling wedge and all that stuff because you'll you'll lose your mind.
All right, but I think
Let's wrap it up.
yeah, we're falling both asleep here.
That was 2 hours. Jesus
Uh,
Christ, like 2 hours on a Friday. I commend all you guys that are here that really want to learn. I mean, I love talking about this crap, and I appreciate you guys that are putting in the work. It really shows that you guys care and are trying to do your best to get better at this stuff. And shout out to the homies that we have in here, Dr. Mikey, who apparently doesn't sleep, and NFT, who we all hate. Just kidding.
well, guys, it was definitely a pleasure. Sorry again, it was late. I just couldn't do it tomorrow because of my flight. But again, we'll hold this again next week, God willing. And it was really a great pleasure talking to you guys. If you have any questions, you can feel free to reach out to us, or you can ask it in these chats, and we'll try replying whenever we can. I know a lot of you message me. I unfortunately get like 200 to 300 messages each day, and I'm getting, it's very hard to deal with it. But I'll try replying to you guys as quick as I can. But until then, I hope you guys do really well. See you guys next week. Again, it was a pleasure. Thank you again, JP, for being on with me.
Yeah.
And thank you guys, as JP said, to taking the time to learn, because, we're addicted to this stuff. So it's nice talking about it and seeing other people who's willing to learn about it. All right, guys. Have a nice one.
You guys
Enjoy
have
your
a great
weekend.
one. Take care.
Yeah.
High five, Betty, everybody. Ciao.
See you.